Welcome to the Brick Velocity Podcast, the show dedicated to helping you maximize your returns by buying and selling Lego. Each episode, your host Ryan will break the stereotypes of investing in Lego, and you can use that advantage to boost your long-term profits. Now, on to the show.
Hello. Welcome to episode 2 of the Brick Velocity Podcast. I'm your host, Ryan. Today we're going to be talking about the overall strategy that I use and you might use to help identify the Lego sets that you want to invest in. As I mentioned in episode 1, this is buying season for Lego investors. And the reason for that is that retirement for those sets that are retiring is coming up soon. Most of the sets that retire do so at the end of the year. And so between October and say January or February, those sets will start to disappear off of the shelves. Lego will discontinue making them. They'll send out the last batch of whatever they've manufactured to manufacturers for the Christmas season. And once they're gone, they are essentially gone. And so now is the time to start acquiring those sets because, as we'll talk about a little bit later in this episode, the first year after retirement is really the key year because that's when you get the largest percentage growth over its MSRP or over your buy-in. And so you really want to focus on that first year after retirement. So we're going to start by talking about some of the tools that you need in order to do the analysis. The analysis is shockingly simple, far more simple than I think other podcasters or other YouTube channel producers would lead you to believe. Then we're going to talk about what our sort of overall monetary goals are, hold times for sets, etc. And then finally, we'll talk about the actual criteria that I use to evaluate the sets that I believe are retiring in any given year for making my sort of big shopping list of sets that I might end up wanting to purchase. So first, what are the tools that you need? They're fairly simple. You need 3 different websites, maybe 4 if you don't particularly like one of them. But you need brickset.com, which is a wonderful website that provides tons of information about various Lego sets. The most important of which, for our purposes, is the date that the set came out and the date that the set retired. You can see when the set came out on Brickset by just going onto the website and seeing when it came out, searching for a particular set, and it'll tell you when it came out. The second resource is CamelCamelCamel.com, which I'm sure a lot of you have used, which gathers information about the sale prices or offer prices for particular items on Amazon. Not just Lego on Amazon, but any product that you might want to buy on Amazon, and it keeps that data over time. So you can kind of see a graph of how the prices have changed over time. And you can compare third-party sellers to Amazon's own price, and this gives you an idea of how a set has performed historically. And then finally, Amazon.com itself, a site we're all probably very familiar with, and that will tell you a couple of important pieces of information that we'll talk about later. If you don't particularly love the interface on CamelCamelCamel, you can also use Keepa. I'm not as familiar with that site. I don't pay for their data subscription. They do have a subscription data plan that you can subscribe to try to get some additional information. But I personally have found tremendous success using just those 3 websites that I talked about. So those are the tools. So let's talk about our overall goals. And this is where some of my advice and my recommendations might differ from other producers of content about Lego investing. My goal is to essentially double my money in a year. I aim for 80 to 120% profits after fees in the first year after a set retires. So, for example, if a set is $40 and I get it for a standard kind of 20% off discount, which is sort of the standard discount you might find at a store, then I'm going to aim to sell it for an amount of money that will allow me to clear $65 or $70 on that set. So essentially doubling my money. And the fees will differ depending on the platform. If you're selling on Amazon, your fees are going to be 20 to 25% of the sale price. If you're selling on eBay, they will be a little lower, maybe 15%. If you're selling, on a Facebook marketplace where you're meeting up with somebody and exchanging a set for cash, then your fees might be zero. So wherever I'm selling it, I'm aiming to essentially double my money in a year. And this is significantly different than what other people might tell you to do. If you listen to other podcasts or listen to other YouTube channels, they will suggest hold times much longer than that, 2, 3, 4 years, with financial goals that are much loftier than just simply doubling your money. They target 300 or 400% returns, and they give examples of sets that have performed that over time. In my experience, sets slow down in appreciation in a significant way after that first year after retirement. There are many, many sets out there that have doubled or maybe 2.5 times their original MSRP after a year, that then just sit there and do almost nothing for years and years and years. It is the very rare set that continues to accelerate or continues to appreciate at the same rate after a year after retirement as they do during that first year. One example that I would point out is an extremely successful old set, and I'll have a link to the CamelCamelCamel page for this particular set in the show notes. This is an old an old Disney set, 41063, Ariel's Undersea Palace. This is an old and extremely profitable set for people that bought it when it came out. This was a set that came out in 2015, I think January 1st, 2015, and retired at the end of 2016. Sort of a standard kind of 2-year life cycle for the set. It was kind of a bigger play set involving Ariel, and it had an MSRP of $55. It was sort of widely available in the mid 40s, sort of standard 20% off discount. And then it retired at the end of 2016. And if you look at the chart, you can see that that set has appreciated nicely over time. Its current buy box on Amazon is in the mid 240s, or maybe the lowest available is in the mid 240s. So that's 5 times or almost 5 times its original MSRP. But that's also closing in on 5 years after retirement. It retired at the end of 2016, and we're now towards the end of 2021. So that's 5 years after retirement. If you look at the chart as to how it actually performed, though, you'll see that in the first year after retirement, so if you go from the end of 2016 to the end of 2017, it grew rapidly. It grew from, say the $55 MSRP up to, north of 100 in the sort of 120s by the end of the next year. So it grew, it more than doubled in that first year. And by Christmas 2018, so a year after that, it was kind of just barely cracking the 160s. So after the first year, then it grew, 33% or so, 35% maybe that second year, which is, a great growth rate if you're looking at overall investment growth, but nothing compared to the first year where it more than doubled. And then after Christmas 2018, it just kind of hung out there in the 150 to 190 range for well over a year until early 2020, when the COVID bump, which applied to basically all toys, just kind of made it skyrocket again up into the low 300s. It eventually kind of retraced and has settled back into the kind of mid 200s. So the moral of that story is that in the first year, it more than doubled. And then the returns were kind of not so great after that. And if you were sitting around waiting for 300% returns on investment, you were waiting for that set to hit $200 so that you could quadruple your money, you were waiting a very, very long time. Whereas if you had sold at the end of the first year, had taken your, doubling your money and then invested in another set that doubled the next year, you would be way ahead of the person waiting for that 300% return on this particular set. So if you double your money twice, it's the same as quadrupling your money once. And in my experience, selling sets after that first year, when the hyper growth of the set kind of starts to wane off, is a much, much better strategy. So that's the length of time we hold the sets. In terms of the size or piece count or price range of sets that I try to invest in, I stick to, as a general rule, sort of the mid-range size of sets. Lego obviously offers sets all the way from $5 up to several $100s, pushing $1,000 for the largest sets. And in my experience and in my opinion, the best ones for investment purposes are somewhere in the $20 to $50 range. I'll sometimes dip down to $10 if it's a really good deal or a particularly interesting set, or push my target up to $100 if it's a particularly appealing opportunity. But I almost never go much above that. It takes a pretty exceptional scenario for me to invest in a set that's over $100 MSRP. And there are a few reasons for that. And if you just go back to the Undersea Palace chart, you can see kind of why from a growth standpoint. It's much easier to double in price if your starting price is $50 than if your starting price is $200. It's much easier for a $20 set to become a $40 set than for a $200 set to become a $400 set. It just becomes an entirely different purchase from the customer standpoint. Second, and this is less related to investment gains and more just sort of risk as a seller, you're going to have some returns when you sell stuff online, no matter what platform you use, unless you're exchanging it for cash with somebody off of Craigslist. And if you have 10 $20 sets that you're selling for $40 versus one $400 set that you're selling, well, your risk is just much higher that a scammer or a misguided buyer is going to end up returning that set to you. Maybe it won't be in as great a condition. Whereas if that happens with one of your 10 $40 sets, it's not as big of a hit to your bottom line. And so I find that those larger sets are much riskier from a sales standpoint, because you just risk those returns coming back to you and losing your gains, having a dented set or a damaged set or an open set. Maybe it's actually a fraudulent return. And those just happen far more frequently with the bigger sets, because they have chase minifigures in them, or are otherwise more desirable on the secondary market if they're actually scamming you. So for those two main reasons, I like to stick to sort of those mid-range sets. Let's move on to the data that you might use to actually find your shopping list of sets. And around this time of year, I make a sort of master list of sets that I'm interested in acquiring. Lego creates a couple hundred new sets a year, which means they also have to retire a couple hundred sets a year. And I like to make a big list of the sets that are really sort of on my radar screen. And it might be 40 or 50 sets, depending on the year and depending on the themes that have come out and which themes are retiring. And in my experience, there's really only 4 important pieces of data that you need to make this list. You need the date that the set was released, the date of its retirement, its current price on Amazon, and its current Amazon sales rank. And we'll talk about each of those for just a moment. So we'll start with the date of retirement. There are a lot of great resources online that put together lists of sets that should retire this year. Your typical retirement is 2 years after release, but sometimes they go on longer, sometimes they go on a little bit shorter. And there are people with at least as good, if not better, information than me about what sets are actually retiring, because they have insiders at Lego, or see what sets go in and out of stock at various Lego websites in other countries. They're just sort of they're masters of compiling these lists. And so if a set isn't retiring this year, I'm not interested in it yet, unless it's some crazy good deal of 70 or 80% off or something like that. If it's going to retire in 2022 or later, then we should worry about it then, not now. The deals will come for those down the road. Second, we want to know its date of release, and this is probably the least important of the 4 pieces of information, but I think it can be helpful sometimes. If a set has been out for a very long time, 4, 5, 6 years, which sometimes can happen with architecture sets, or some of those big modular sets, sometimes you get kind of a longer release date or release time. It's happened a couple of times with Minecraft sets. If they've been around for more than 3 years, I sort of consider that to be kind of a red flag. And the reason why is that there's just more supply in the market. A certain percentage of the sets being bought are being bought by investors to resell on the secondary market. And the shorter the shelf life for the set, the less of them that are out there. There's only so many that have been opened. And so, in the secondary market, I want to face as little competition as possible within reason. And so just as sort of a tiebreaker factor for me, if there's a set out there that's been out on the market for 4 years, I'm going to put that lower on my ranking than, say, one that has had a sort of standard 18 to 24 month shelf life. Unfortunately, the reverse is not true. Occasionally, you will have sets that have a super short shelf life. That's not necessarily an indicator of a really good investment. And one example, again, I'll have a link in the show notes, is an old Friends snow resort set. It's 41321 Snow Resort Off-Roader. This was part of a line of Friends sets that came out in 2017, started in 2017 and went through most of 2018 for most of the sets. And they were, winter themed. They had a ski lodge, they had a chalet house, they had a hot chocolate van, they had a whole bunch of sets that were in this line. And one of them was this Snow Resort Off-Roader, which was a small set. It was a $15 set, so a little smaller than what I typically would invest in. But it had an extraordinarily short shelf life. It came out in June of 2017 and retired at the end of that year, which means it was only on shelves for 7 months. Unfortunately, that did not portend strong results in the aftermarket. It retired at the end of 2017 and never really broke $20 on Amazon, at least convincingly broke $20 on Amazon, until the COVID bump to Lego sets in 2020. So it just kind of hung out in the $15 to $20 range for 2 years. So unfortunately, that's a bad investment. And I did have some of these, which I got at a decent discount, thankfully. And so my returns weren't too bad from this set. But it was not a strong performer due to its short shelf life. Instead, the shelf life is sort of a way to weed out sets from your list, or downrank sets from your list. So those are the first 2 pieces of data. The next 2 are the Amazon sales rank and its current Amazon price. And these kind of work in tandem. So for those not familiar with sales rank, if you scroll down on an Amazon page for an item, any item, you will see a sales rank for that item. And Amazon kind of groups items together into categories: an automotive category and a clothing category and home office or office related products, and then there's also a toys category. And then they give a toy a rank based on how quickly it sells. When an item sells, it moves up the list, and when it doesn't sell for a period of time, it just kind of moves down the list as other items leapfrog over it. And so number one is the best, and it goes down from there into the thousands, and can go into the hundreds of thousands or even millions for categories with a lot of different SKUs on the shelf. The books, for example, can go into the millions. So in my view, for a set that's currently priced at MSRP, I look for and target, at least as an initial screen, sets that have a sales rank of 8,000 or under. And if the set is currently priced at 20% off, so it's a $30 set that's currently priced at 24, I would really like to see that sales rank under 5,000. And by focusing on these sets, you're focusing on the ones that on the shelf right now have the highest degree of demand. And that's a really good indicator that after the set retires, it's also going to have strong demand. A set after retirement and the price doubles, it's not going to hold a sales rank of 8,000 or 5,000. I don't really know what it's going to do. Some of them do hold an extremely strong sales rank after retirement, because they just have that much demand. And some of them, kind of tail off into the 50,000 or 70,000 or whatever. But having a strong sales rank while in production is a very good predictor of having a strong sales rank after retirement. And so those are our screens. We look for sets that are retiring now in our price range of $20 to $50 that have a really good, strong Amazon sales rank. Unfortunately, sometimes you'll see sets that, are deeply discounted on sale. There's maybe 40% off or even 50% off on Amazon. And obviously those are going to have a really strong sales rank because they get bought up quickly because they're on a strong discount. And that's why I like to see what the sales rank is of a set at its kind of normal everyday sales price, which is typically either MSRP or 20% off. And then we go from there. And by focusing on this data, which is pretty straightforward, we ignore a lot of extraneous data that can cause bad decision making. And this is another area where I kind of differ from others in the Lego investing community that I see, at least publicly, giving their content. So like theme or piece count or what minifigures are in the set, it's all kind of largely noise, is in my opinion. I think if a set is popular now, and it will be later, and so I try to let the market tell me what's popular. There is, in my opinion, way too much focus on price per piece. That's a really irrelevant statistic that will weed out winners from your scope. Let me give you an example. There used to be, they don't have a juniors line anymore in Lego, but they used to have a juniors line that were sets focused on kids that were 4 and 5 years old. Now they're just kind of marked as a 4+ set, but they used to have an actual line with a separate numbering system for junior sets. One example would be, and there are tons of these examples, this is just a kind of random example, 10754, which is a Marvel superhero set, Spider-Man versus Scorpion Street Showdown. And this was a junior set that came out, in 2018 and retired at the end of 2019. It's sort of a standard shelf life set. It was a $20 set, it had Spider-Man and Scorpion and a buggy, a couple of buggies for them anyway. It was a juniors set. And those junior sets tend to have slightly larger pieces because you're dealing with younger children. They tend to have a couple of minifigures. And they increase the price because they're aimed at younger audiences with bigger pieces in the bag. There aren't a ton of like small little 1x1 pieces in the bags. And this set did fairly well. It retired at the end of 2019, caught kind of the COVID wave in 2020, and went from $20 or $16, which you could widely get this set for $16. even went as low as $10 on Amazon for probably a day when it was clearancing out the last of what it had. And by the next Christmas, by the Christmas of 2020, it was pushing over $50. And so it had more than doubled in a year. This is a very good set from an investment standpoint. If you invested $16 and now you're selling it for $50, maybe you're netting, 40 or 42 out of that $50. Then you've easily more than doubled. You're closing in on 2.5 times your money. Unfortunately, from a piece count standpoint, this is a really bad investment because it only had 125 pieces in it. And a $20 set with 125 pieces is 16 cents a piece. And using any calculator or any advice that you get online, 16 cents a piece is a very high price to pay for Lego. And so if you had excluded this due to the price per piece, that would have been a mistake. And then the second thing that we're trying to weed out is comparing similar new sets to older sets. And this happens a lot, like trying to find an example of a set in the past that looked similar or was in a similar theme, to which you can kind of compare and expect similar performance. And this is also a fallacy and something I don't do at all. I try to treat each set as kind of its own stock, if you will, with its own supply and demand, because it faces very different supply and demand conditions from a similar set in the past. I see this kind of analysis all the time with Harry Potter sets, for example, because these have been released 2 or 3 times over the last 20 years. In particular, the Hogwarts Express, which has been released, I think, 4 different times. And the last one was a decade ago, which was a completely different era for toys. The iPhone wasn't released until 2007. So we're talking just a couple of years after the iPhone was released. It was the last Hogwarts Express Harry Potter set. And so I try to avoid comparing sets to those because they face different competition in the market. There were different toys out at the time. There were different Lego sets out at the time. There were less Lego sets out at the time. There were less investors in Lego sets at the time. And so I try to just avoid that kind of retrospective analysis of a set. Instead, I try to focus on what is its current demand and try to predict what its going forward demand will be based on its current demand, how long it's been on the shelf, and when it's going to retire. So, we would never do this kind of analysis with like stocks, for example. We would never, if a new search engine started up, we would never compare it to Google stock from an investment standpoint, because it's a completely different company facing completely different demand conditions in the market, or demand and supply conditions. So, the end of my long rant to say that we use this important data to kind of comb through the sets that are expected to retire and create a shopping list of sets that we're interested in. And this will probably be a longer list than the sets that we actually buy. And so what do we do then? We just wait. We wait for retailers to run good sales on the sets that we like, and then we pounce on those sets when they're available. And the amount of patience that you can show depends on a couple of things, but most importantly, the amount of money that you want to invest. If you are just starting out and you have a small amount of capital, say $100 or $200 to invest in some sets, then you can be extremely patient and you can wait for one of these sets to fall into 40 or 50% off online. And then, buy your sets, get your $100 worth or $200 worth, and sit and wait for next season when we try to sell them in 2022. If you have a lot of money that you need to invest or want to invest, you have $10,000 that you want to invest, you have to be a little bit more aggressive with your purchases. You can't sit around and wait for all of your purchases to come in at 50% off, because you may just never You may never spend the money, and the sets might eventually leave the shelves. We also might sort of pay attention to how inventory is running at various sites. If there's a particular set that you really like for one reason or another, if Amazon, for example, runs out of a set earlier than other retailers and it's, performing well on Amazon, then we might go to Walmart or Target or Lego.com and scoop up their inventory, even if the discounts aren't strong, because we're seeing that it's already run out on Amazon and is performing well. And patience is really key here, because having a good buy-in price is just as important, if not more important, than selecting a quality set that will perform well. So it's important to get our buy-in price as low as possible relative to MSRP for a good quality set. So that's the show for today. This is a little longer than I typically would go. This is in excess of 30 minutes, and I really would like to keep them sort of in the 15 to 20 minute range going forward. And in the next handful of episodes, we are going to go through the major LEGO themes and do this analysis and try to help put together our shopping list of sets as we head into the winter. If you have a question for the show, we'd be happy to take them and answer them on air. Feel free to contact us at podcast@brickvelocity.com. And thanks again for joining me.
Thank you for listening to the Brick Velocity Podcast. If you liked what you heard, please subscribe to the show and give us a rating and review. See you next time.